is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can plan for the next day. Right. So today was the last day of the month, May 31st, and it is a Tuesday, and markets had paused. Right. It was basically consolidating, doing nothing, forming an inside bar, and banks were facing resistance for next. Right. So let's look in the charts and see. So before that, the pre-market analysis will be based on all these parameters. Technical parameters that you see, we would have data analysis, which would do global commodities, global markets, and then we'll wrap up with some action as well, right? So here is the chart, Nifty and Banknifty. You can see this is an inside bar. It's an indecisive small body doji kind of candle, and indecisiveness is there. Sideways price action is there because consolidation is there, and that's what that price pattern indicates. But remember, we have a good gap support at 16,500 kind of level. So that is a gap support, window gap, pro gap that was formed yesterday. Bank Nifty also has that gap, but look at what Bank Nifty was doing the last 2 days. Nifty was doing good yesterday, but Bank Nifty was kind of giving up some of the gains after facing resistance at the 36,000 levels. It was retraced and then just taken a gap support. So this, whenever this previous resistance formed from the breakout has happened and taken a support at previous resistance, then there is a chance that it can bounce up from here tomorrow. So Bank Nifty has what is change in polarity bounce potential, and you have a gap support that is down, and that's what the price action is saying. And this is a spinning top. Spinning top does not have much meaning unless it's in the top of a trend, except that there was a big bull and bear fight that happened, indicated by the wicks on the both side. Right. Intraday price action is this, right? That's a 1% downward gap down that happened in the morning, and then it was recovered, and at 3 o'clock there is a big sell-off, taking it back to where it was, and not losing much. But Bank Nifty, that sell-off was big, right? Some big sell-off happened at 3 p.m. Exactly the same pattern. It gap down and then recovered from the bottom around 1%, and then made it in the region 3 o'clock. Big sell-off happened. Remember, there's no use markets today. Yesterday, basically, due to some holiday or something. So basically, it's not much lost. 77 points, it's 0.5% lost in Nifty, and then almost 1% lost in Bank Nifty as well. So indecisiveness in the Nifty, consolidation, and a small retrieval in the case of Bank Nifty, right, with the potential for a change in polarity. Remember, we are in a trend line channel. If you look at another view, it's trend line channel that's down moving. It's still in that. Breakout has not really happened. There is a confluence of resistances here of 200, 150 DMAs, right? Bank Nifty is actually caught in that. So it climbed above the 50 DMA, and then today it closed below that, right? So there is some resistance. There is going to be a lot of condition that is going to happen at this zone, because there is a 20 moving average, there is a 100 moving average, 50 moving average, there is a gap resistance, and all of this is there. So you can accept some time before it can break out and go above that, right? So gap resistance along with the confluence of moving averages is the trouble. Well, the bands are showing a consolidation, sideways price movement after expansion seems to have over, and it's a bullish bias because price is still above the 20 moving average. Basically, support resistances, if you see, the most support is seen at 16,550, 650, and if that loses, then 16,352. This gap is not longer valid. The gap is closed. Just forgot to remove that. So because the gap was conquered yesterday, and it's no longer valid. So the support is 16,350, 16,450 is Fibonacci 50 retracement. If that is gone, then so basically there is a gap that is formed there. Forgot to mark that. Right. So that level is it. So this 350, 450. That zone is going to be a major support zone, right? And if that breaks, then go to 16,100, 16,200. Below that, you have 16,950 zone. This is Fibonacci 16 retracement line. If that breaks, then you go to 15,735, previous small swing low. Then after that, 15,650. Let's see. Support zones on the downside, some resistance above would be 16,700, 750. That zone first, and then 16,800, 900. That's Fibonacci 38, and above that, 17,000 levels. At 17,400, you have a gap that is getting completed. So that's that zone of 7,200 or 7,400 is going to be major resistance on that side. That's how it's Bank Nifty. Bank Nifty, let's see. The first support would be 35,600, 35,900, that zone, and then first above that resistance would be 36,300, 36,800, Fibonacci 38. Then you have another gap that's coming at 35,900, 37,100, and 37,500 is where the gap is getting closed. Right above that, you have the resistances that comes again at 37,700, 800, and then 38,000 nearby zones. And then the previous swing low high, that's 38,500 levels. So downside supports would be once the 35,900, 600 is gone, then you have 35,000 zones, nice 50 retracement level. After that, 34,350, 750, that's one, and then comes to 34,100. It's a strong Fibonacci 61, previous swing. Fibonacci 61 retracement levels. If that closes, then you come to 33,000 is the previous swing low, and then 33,000. If that's gone, then you have 32,150. That's the previous swing low. That's how the supports on the downside make a mark of these levels. Right? That's the support and resistances. Momentum remains in the sideways zone. It is climbed after doing a range shift for the momentum on the Nifty. Banknifty is basically taking a bend. That bend means there is resistance clearly on the upside. That's what it indicates, right? It may take some time before it can consolidate, and then slowly it may move sideways, and then one day it may break out and get to the bullish zone. So it's my bad. So basically, momentum is sideways on the medium term and the short term on the Nifty and the Nifty. Trend has reversed to bullish zones in the short term. Continues to be there, but strength is falling. As you can see, the green line is falling. That means bullishness is not that great yet. And medium term, the bearishness is still there on both indices. Right? It takes time for the trend to change the medium term, right? Because the trend reversal happened just yesterday, and then it's going to take time. Right? But as of now, the trend is bullish in short term. Momentum is sideways overall, not that bullish. VIX had spiked a little bit after a big cool-off that happened, and it was a small spike of 2.5%, but it climbed above the 20, psychologically 20 plus, right? Implied volatility is what is mentioned here is wrong, right? We'll just quickly go and look at that in the options and then see what is implied volatility is 18.91, and then it is 74, right? 18, right? 18.91 and 70, right? So that's yeah, let's see, IVP is the percentile, that's implied volatility percentile. That's for a 52 basis. It is still at a high level, but not at the highest level of 90%, which was there 2 weeks back, right? So VIX had cooled up a lot, but today there was a small spike that happened, right? When the market crashed, a big sell-off happened. So yeah. Open interest analysis, you can see a lot of call writing is getting added up on the Nifty and the Banknifty. Some unwinding is happening lower team levels on both. So not still 2 more days. Tomorrow is Wednesday. So clarity on June 2nd. Options open interest data is not giving much clue. It just says that it may be holding the 16,000. So it's between 16,000 and 7,000 is the highest. Put and call writing is seen in 16,500 and 7,200 is second highest. Put and call writing is seen, right? Put call ratio is bullish 1.03, and Banknifty 35,000 and 36,000. It's 1,000 point range 2 days before the expiry, where the highest put and call writing support resistance can be seen. 34,000 and 36,500 is where the second level of support resistances are seen. Second highest put and call writing. 0.7 is close to bullish, but not bullish enough. So Banknifty is showing some bearishness, and build up on the futures open interest also is short build up, and long unwinding is what happened in Nifty, right? Short build up in Banknifty. So both are bearish. So PCR seems bullish on Nifty, but futures open interest is showing not good, long unwinding. So it's a mixture of bull and bear. So that's exactly what happened today, right? Nifty gave up more, so short build up happened, and the PCR also has dropped, but Nifty is showing some strength. It is not ready to make a big fall. That has not happened. We don't know tomorrow it will happen or not, but as of now, not much close, but make a note of that 16,000 and 7,000 levels, and 35,000 and 36,000 levels, probably maybe what June 2nd expiry weekly, maybe ending up with it. So red is back. Kodak Bank is showing red. It is performing earlier good. It is showing some green. Titan, so FMCG is showing green, but otherwise Reliance and all major heavyweights, HDFC Twins and IT did not perform well, good today. Banking did not do well, healthcare did not do well. Other sectors across, if you see, there was some buying that has happened. IT also, but no, it did not go deep. Red the IT stocks today. So next HSBC, it was kind of resistance that you can see clearly before climbing into the bullish on both the HDFC twin stocks with the momentum. Is at is facing resistance where it is hitting the 60 and then falling down. Right. HDFC is trying to clear the major gap resistance from where it had slipped down. HDFC Bank has bounced from there but unable to climb further up. Lands also some showing red and facing some resistance or the momentum indicator is showing. So maybe consolidating before it can break out to make the new all-time high. IT stocks also showing some green on the TCS, and at the majors seems to have almost conquered this major support zone from where it had slipped and then maintaining the parallel channel and momentum is in sideways. But today it's a small pullback on the IT stocks. Info also same. Info has got a major resistance, gap resistance, which is tested here before it can go up. ICICI Bank seems to be the bullish ones on the short term, and today also some green see seems to have conquered the major support zone from where it had slipped down, right? And maybe as long as it moves above that, it may be the bullish momentum that may be maintained in the ICICI Bank. So Kotak Bank is facing severe heat after a good rally from the previous support zone to the next support zone, next resistance zone, and it has got hit at that level, and then last 2 days big sell-off has happened. Look at the volume, big volume sell-off is happening. Momentum has slipped from the bullish zones back to the bearish zone. So something wrong has gone wrong with the Kotak Bank, which is doing very good when all the other banks are not performing. So overall bank did not do well. Nothing much happened about that. Just trying to maintain the momentum is what you can see basically. None of them really did well except for ICICI Bank, right, which is in the bullish zones. So except ICICI, none of them are done good. Kodak has done bad. So that's the index heavyweight picture that we're getting. Sector-wise, industrial sector-wise, if you see, it's a mix of down and up day. IT was kind of flat, down. Metal is up, auto is up, and FMCG also up, and realty also up. So what was down was basically IT and pharma. IT and pharma was down. IT and pharma was down, except for so bullishness is shown in FMCG and auto. It continues to be there. FMCG and auto is performing, and so bearish momentum is there only for the metal, and rest all sectors have managed to get into the sideways zone. Institutional participation, if you see, not big sell-off has happened, but 1,000 crore sell-off has happened in the Fyers today after giving a hope that FIS showing some green after 1 month. So the entire 1 month, just 500 crores buying is all that happened. That happened yesterday. But today again, FIS is back to selling mode. But consistency is seen in the buying in DIs because retail money keeps coming back. Dollar consolidating and maintaining the 77.6 level. Rupee at extremely weak position. Dollar index had cooled off. It is cooled off a lot, right? But it's not having any immediate impact, or it's not correlated directly. But yeah, dollar index seems to have cooled off a lot after making a 17-year high or something. So overall, rupee at this level is not great. US markets are not seen to be showing anything yesterday. There's no data. The market was down or something. But the last move on the Dow was clearly bullish, and it is rising momentum. Trend crossover. That's seen in the S&P 500 also, but there is some red facing some kind of resistance at the previous resistance zone. That's seen, the same is seen on the S&P 500 also. Some red move is seen on the S&P 500 and Nasdaq, but all three indices had bounced up substantially, but not conquered back the support zone from where it had slipped down. So you have to be cautious and watchful, but thank God it's not in the bearish zones and at least trying to maintain the momentum the sideways. So, but this information has to be rechecked the pre-market before. So as I usually say, whenever there's a big move, make sure that so we can expect obviously in a gap, not a gap. It's a small move, it may not impact. Okay. Crude rising up and then crazy level of 117, which is not good. Is once again going to the 13-year, 14-year, 15-year kind of highs, and it's worrying, right? The dollar rupee has weakened to the core. Crude is rising up like anything. And you have inflation, Fed interest hikes. If I am selling, what we need. Right. So gold is sideways consolidating. Not in a mood to take out the resistance and move further higher. Two actionables, Mahindra and Mahindra long. It was yesterday also long. Good breakout has happened, confirmed. Any price move above this candle can be the stop loss at this neckline support of the cup and handle. Can be a good swing trade for the next coming days. Auto sector also is performing. ABB India is showing a rounding pattern, breakout. Right? So any alert candle above price move can be a long with the stop loss in the neckline. Momentum is also in the bullish zones. Trend also in the bullish zone. So two long positions as of now, Mahindra and ABB India. Wrap up, it's almost the same. Mild bullishness remains because the trend has crossed over in the short term. Bands are showing sideways with the bullish bias. Momentum is rising, and some FI buying happened. Big sell off taken a pause. VIX has cooled off. Changing polarity potential is there. So all the reasons why I continue to be. But you have to be cautious because there is a crucial previous swing low that was made that can be broken, and another swing low can be made by having this as the lower high that got formed. That can also happen, right? So yeah, so that major support zone is very strong. That's why we had a bounce that has happened second time from there, second or third time from there. So that gives the feeling that market is not ready to crash, in spite of all the uncertainties that we have. So uncertainty is fully there. The RBI has hiked the interest rates and they keep hyping that. US inflation is high. They'll have the Fed interest hike rates coming next month also, right? FIs are selling, continue to be selling. Crude at 117 and going to 120, rising momentum. Weak rupee, global cues are bad, right? War is there, so everything is negative, right? But the market is staying up, is not ready to crash big. That's the only thing that is positive we can see. 17,500, 37,500, 15,650, 32,100 downside. So that's how the levels and the probability of breaking that is what you have to look at. We cannot predict or we cannot know anything on how market is. Market will be. Only we know that there is a probability of this much percentage that this can work out and this may not work out. This level may be maintained because it had maintained previously historically. There is a high chance, not full chance. So only thing that we can do is manage your risk by cutting short the positions whenever VIX is spiking, and always taking overnight hedge positions so that your risk is defined and your capital is intact. It does not get wiped out. So be cautious. VIX is still very close to 20 levels, so it can again spike back and main road to the 28, 20. All the possibilities are there, right? Because the uncertainty is still there, right? But what the charts are showing that it is sideways consolidation that may be happening for the very short term, right? So mild bullishness is the view that I have. In case this analysis with all these parameters, that slides that we've gone through helps you to frame your view for the next day. And consider hitting the like button, subscribe if you're not done, and share it to all your friends and colleagues and whoever. We have very few subscriptions and appreciate the help in this regard. Thanks for watching. Happy trading, happy learning. Bye.